Kaynes Technologies is back in the turmoil zone after crashing over 50% twice in the past year, and it has hit a fresh 52-week low as well. Let's understand what's happening with them, with all the fundraisers that they've done in the past, and what's the way forward. My colleague Puneet joins us with all the details. Puneet, what is the story looking like with the Kaynes Technologies, though that's mild recovery in trade today?
Well, it's been a tough 2025 for the company, and 2 times is what is corrected 50% in just a period of 2 months. So when you look at January to March of 2025, the stock crashed at that time, and it has hit a 52-week low yesterday in this trading session of 3,683 as well. It's a level that we almost didn't imagine the company could hit, with a high of almost 7,800 at the start of the year. When you look at the 2 time periods specifically, Jan to March 2025 is where it hit 7,825 as the peak price. The lowest was 3,900. It just took 66 sessions for the company to have the 50% drop. When you look at the second period, which is much more recent, between October and December, 3,711 is what the low was, and then it hit another low of 3,683. So another just 62 sessions where the story completely changed for the company, and this time it seems much more severe based on the cash flow concerns amongst others. Now, when you look at the time period of fundraisers and of the last 3 years, it listed in November 2022, raised 857 crores, out of which the fresh issue component was 530 crores. And you can see that over the last 3 fundraisers, the company has raised funds at almost 10x the IPO price in as early as June of 2025. Post that, the story has, for the sector as a whole, has been changed in terms of valuation, as well as concerns for revenue recognition and goodwill as well. And largely that seems to be the play. Now, the reason we are discussing the fundraise is because the company's growth trajectory is quite strong. 61% revenue growth is what's estimated in FY26 alone. But over the next couple of years or so, they have some steep targets. Will they need another fundraise? That's the key question we are asking. Over the next 3 years also, the operating cash flow seems to, of course, go 10x from almost 40 to 50 crores in FY26. This is, of course, the average of brokerage estimates, expected to grow to 522 crores. Despite that, with the new ventures in PCB, as well as the OSAT and the semiconductor facilities, this will lead to a pressure on the free cash flow, down 860 crores in FY26 itself, but doesn't get in the positive territory at all until FY28, and we're still waiting 29 numbers from brokerages, but that is the picture for the counter as we speak. What do you have to watch for in H2 of FY26? The Q3 results will be critical for the company in terms of reporting, cash flow management, as well as working capital. Revenue of 4,500 crores is what's estimated compared to 2,800 crores they did in last year, 25. Second key point is guidance of lowering working capital to 7 to 80 days, and this is the most crucial for Kaynes Technologies, and a $1 billion revenue target that remains in FY28. What is our analysis though? There are investor concerns at the moment on the negative free cash flow, which will be generated in the next 3 years, consolidated as well. The company had stated to NDTV Profit in the previous interviews that they will not need another equity fundraise, but with the growth capital, as well as the worsening position of receivables, that seems to be one of the key aspects. And finally, if the company doesn't manage its working capital, it will need another fundraise. That will be something that investors will be a little wary of based on the company's current share price performance. So that's the profit intelligence segment on Kaynes Technologies. A lot more questions than answers at this point of time.
Absolutely, you said it, and what a comprehensive analysis that was. Thanks so much, Puneet, for that.